Okay, guys, welcome back to episode 11. So in this episode, I'm just gonna continue on from the previous episode where we was going over channels. So I'll just have you a quick walkthrough of how I use trend lines, because it's all about how I approach the market. So for me, trend lines, I only use trend lines in terms of either a continuation of price or a correction of price. So I'll show you examples. So we'll go through euro dollar, just previous price action. So you can see here with euro dollar, that's the origin of the up move, as you can see, but we had a higher low here, and then you can see we practically have a higher low bouncing off this bullish trend line. So again, it's either I use wick to wick, some people use close to close, whatever you want to do, but as long as you have two clear bounce points, then for me your trend line is valid. But again, like I say, the way that I like to use trend lines leading up to just my understanding of the market now is, if we have a look at euro dollar from, for me, this perspective here, then you can see we're looking at longs anywhere in this region. So it's more of a range, it's more of a zone of a trend line rather than one specific line. So that's when I'm using support and resistance for continuation. But when we're using it for corrective structure, or what I mean is a change in price, so it ties into a few chart patterns. So for example, this trend line here, you can obviously see that's a bearish trend line, but this is also a bearish chart pattern, which we'll go into in the next episode. So you can see here, we've got this trend line holding well once we get a break. So it's always practically the same thing. Once we get that break and retest of this region, now we've changed from bearish to bullish. So that's how I apply the trend lines. There's not really too much to go on. It's more of a trader to trader thing, the way you want to apply trend lines. But the reason why, like I say, I like to use a zone is because at this point here, your trend line would have been like this, because that price wouldn't have been there yet. So it's a bit subjective to always just kind of make trend lines fit. That's why I don't really believe in trend lines, so to speak, in terms of just drawing them anywhere, and which is why I've more opted for the zonal trend line, should I call them. So for me, I would apply my trend line like this, and then I'd be looking at price like that from the close there. So for me, you can see we're bouncing in this region. Once we get that break below, so it's always practically the same thing, we got that break below, then we see price sells off. But because overall structure is bullish, we're looking for longs anyway, and then we get a similar pattern happen here again, whereas we have a top, or a range should I say, price gets above that range, and then we see price rally. Let's look for a few more examples of trend lines that I can give you. So another example, which is a good example, would be here on a US dollar Swiss franc. So again, why I like to use a zone, just to reiterate that, is that how would you connect this trend line? So for me, that low to, I'd say around here or there, would be the first low. We've bounced again, and then we've seen a break and retest. So the reason why I like to use the zone, just to add more confluence to it, is we can see we're rejecting here, but for me, I would say when it comes to US dollar Swiss franc, anywhere inside that zone there for me is a, like I'd say, a bullish trend line or a bullish trend zone. So that's how I'd more apply it. So you can see we're bouncing up, we're bouncing up, we're bouncing up, but on this occasion we've broken below and we've come back up to retest this area. We've also got a nice area of supply, which is something that will be discussed later on as well, which adds confluence to that. And then you can see here, we then drop off. Even at the top, you kind of say we had this range here. So like I say, I like to draw it pretty even. So you can even say from here to say there. You can see we're rejecting, we had that manipulation through the highs, and then we've dropped back down. So that's another example. Even here on pound, I think there's an example on pound dollar. Yeah, so even on pound dollar, there's a good example that you can use. We've got this low. Where would you draw a trend line? So for me, I'll draw it to the furthest point first and then extend it. So if we drop back down to our 4 hour, and then we can make this trend line a little bit more friendly. So when we drop down 4 hour here, we can have a look at how this area works. So even again, for me, you could put this whole region in. Excuse me. So you can put this whole region in. So you can see here, we bounced up, we come back in, we bounced up again, we bounced up. So this is just a zone, a nice zone where you would be looking for longs. We can apply our fib as well. And you can see here from 87, we've had a nice pullback. So in terms of risk and reward, where would you want to go long? The highest probability area of going long is in and around this zone here. So just say for argument's sake, we went long at 78.6. Invalidation for me would have to be below this low, which is 154 pips. But you can see right now you'd be trading nearly 2 to 1. So you could start shaving some positions off that. And you can see it's just you're gonna just get a lot more easier. So this you're gonna get a lot more what's the word to say, higher probability setups if you use trend lines in the way that I'm showing you rather than just one line. So you can see here overall we've got a bullish trend line, but then we've also got, like what I was tying into, corrective structure in the form of bearish trend lines. So price always repeats itself, but it's just how it does it. So you can see this is corrective structure here. So rallied up, we have that pullback where that trend line's there. Once we break above those highs, what do you see again? We see price rally up. Then we have more highs here. Once we break above these highs that we've just put into place, we have that rally up, and then we've had the sustained rally. So right now, even with Aussie dollar, where would you draw your trend line? So for me, Aussie dollar, I'd say to myself, by the looks of Aussie dollar and how this trend looks like it's moving, for me, this is a good area where I'd say, okay, Aussie, we could pull back to this trend line and continue higher, but a break through it would say for me we're going lower. New Zealand dollar as well here. So I'd look at it like that. We could bounce back down, but it's just a like I said, a guesstimation of price. You're just trying to guess where price might retrace back to. Even with a US dollar CAD here, you can see we've got this 4 hour pattern. We've broken below, and then we see price sells off. So you see that trend line there, again acting as corrective structure. However you want to add that trend line there. So there's different types of trend lines: bullish trend lines, bearish trend lines. And bullish and bearish trend lines, depending on what kind of market environment you're in or market structure you're in, that would then depend on whether or not it's corrective structure or it's just actually just a continuation. So those are the only two types of trend lines you're going to have. For example, here's continuation, continuation, continuation. We broke, we're going to retest, and we should continue. Or corrective structure in the form of this trend line where prices started to say range at the top here. So you can see we're getting consolidation, bearish trend line, bullish trend line, sorry, bullish, bearish. Then you see the breakout. Once we break past that previous support and resistance here, then you see the sell-off picks up and we drop down. So with trend lines, don't get too hung up on the right way to connect them. As long as structure shows you that you're not missing anything out, or you're taking into consideration all aspects of the trend or the present trend, it's fine to use the trend lines the way you want to use them. The number one thing I'm always going to say to you guys that is the most important is market structure and chart patterns and formations, which we're going to move into later on in these episodes. So thanks for watching.